Alright, welcome to episode 11 of the ICT Mastery Mentorship. In this episode, we're going over market protraction. Now, in the, I think, previous episode, or previous 2 episodes, I went over impulse price runs, okay? And I gave you an example in the next episode of what impulse price swings result in, which is a liquidity run. And we're going over the complete opposite, which is market protraction, okay? Market protraction occurs before an impulse price swing, okay? If I show you in a chart here, I know I have a lot of drawings, but don't mind it too hard. Let me close my applications down because my entire computer is lagging like hell. There we go. That's way better. Okay, but looking here, right? Protraction is basically a retracement before price goes higher, okay, or a retracement before price goes anywhere, okay. A retracement. Let's see the definition of retracement. Let's see how I can give this to you. The definition of retracement is basically when price goes to some point before going in the direction you want it to go. That's retracement, okay? Or it's coming to a point, right? Let's say it's coming down for you. See this little wick here? See how it came down into what? Sell side liquidity came down and then headed back up. That little quick move down is market protraction right here. This little wick right here, that quick move down, that's market protraction. Now looking at this in a, I guess you could say, more precise or intricate scale. Let's look. So we have market protraction and we have impulse price swings, okay? Like I said, before impulse price swings form, there has to be some sort of market protraction. Now let's look here, okay? Let's actually look. In this area, right, price comes down into what? That fair value gap right here. Right there. Already have it marked. That fair value gap right there. I could delete the quadrants because you don't know what those are yet. But it came down into that fair value gap and then pushed higher. Taking out what? Buy side liquidity up here. Price is always seeking liquidity. Remember that. Price is always seeking liquidity. So it went into the fair value gap, protracting or retracing. This was the market protraction. Come back up and taking out that point of buy side liquidity. Okay. And then we retraced again. Back up. See? Okay. We protract again, taking out that low. Okay. When you have, okay, I could definitely define a liquidity purge. I don't know if I want to leak it to you, but whenever you see market protraction, you're expecting price to come to a certain point. Okay. Keep that in mind for the future because you will learn certain points that price can come to, like order blocks, optimal trade entry levels, fair value gaps, which you already know about, old liquidity levels. There's lots of things. There's lots of things, really. But whenever you see market protraction, you want to see price either take out liquidity or come to some sort of institutional reference point before it going into the direction that you would like to see it going, okay? And in this example, we protract or we retrace into what? Right there. Sell side liquidity down there. See? Come down. Bang, sell side's taken, okay? Then look at that, impulse, bang. Then we impulse higher, bang. And then we finally, up here, I took a trade around here, as you can see here, that this is the risk reward, I took a trade around here. But we retraced down into what? That fair value gap. Right there, that fair value gap. But what did we also come into? Do you remember premium and discount? Do you remember that? Uh-oh, premium and discount, do you remember? Right there, we came to equilibrium. So that's a good thing. We came to equilibrium, and then we came to that fair value gap. So that, right there, are your two confluences. Now, let's remove this because I don't want to confuse you by saying, what the heck is the Judas swing? Nope, don't. We're not even going to do that. Not going to confuse you today. But here, the market protracts into this fair value gap and going into a discount before moving higher into a premium, taking out this buy side liquidity here. So looking at the anatomy, I'm going to say this again. Why did price move higher, okay? We know that price has to protract before going anywhere. It has to. It has to protract and or manipulate into something, okay? Market protraction and manipulation and retracement are the same exact thing. They're just different terms, okay? They're the same exact thing, but different terms, okay? But the term that you would normally use is manipulation, okay? That's what you normally use. When it comes to being in the I guess you can say, inner circle world or inner circle trading world, inner circle ICT world, whatever, or when you're around a community of traders, okay, and you see market protraction, say that's manipulation, okay, because that's what it is. It's manipulating down before expanding higher, okay? That's what market protraction is. But we call it market protraction because it's just a fancy term, and it just sounds cool for a little episode. But this is manipulation, okay? And or market protraction, whatever you want to call it, but you should refer it to as, manipulation. We manipulate into what? This fair value gap here, which is below the what? The equilibrium. Do you see that? It's right below the equilibrium. So that's already your confluence or your reference point right there. Because like I said, when we have to protract or manipulate or retrace, those are all three are the same thing. We have to manipulate into something. What? It can be anything. This fair value gap. And then we rebalance this dealing range here. We rebalance into what? Equilibrium. So that's your confluence right there. Now looking here, we expand. Bang! And I caught this expansion. I'm not going to tell you what I used because I don't want to confuse you, but I did take this expansion here. Bang! And that was a nice trade for me. Very beautiful. Very, very beautiful. But deleting this, okay, we're now at the, end of price action right now as of Friday, October 11th, 2024 at, 5 o'clock. I'm recording this that day, but at around 7:42 p.m. But we're going to go over a couple more examples of that. Hopefully I can, go on a different chart. The other being too many drawings. Yeah, let's go on NASDAQ. Sure, why not? I don't have any drawings on NASDAQ. All right. So, just looking here, okay, let's say you're on the right side of the market, which is bullish, okay? You expect the day to be bullish. Like I said, before price goes anywhere, there's always going to be some sort of market protraction or some sort of manipulation. Did price do that? Yep. How? Where? Uh-oh. Do you see that? What did we come and take out? Sell side liquidity. Oh my god. Super cool, right? It's very cool, isn't it? Very, very cool. Now, we retrace down, but we retrace down into this liquidity point, but is there anything else we trade into? No. Not anything of your knowledge, okay? There's something to trade it into. There is. It's right in this vicinity. I'm not going to tell you, though. It is right in your face. But do you know it is? Do you know what it is? No, you don't. You shouldn't. At least you really shouldn't know what it is, because I'm taking you step by step by step by step. It did come to something, but according to your brain and your knowledge, no, it didn't come to anything. Okay, it didn't. I'm gonna act like I'm as not dumb, but I'm a newbie. Okay, I'm gonna act like a newbie also, just like you, because you're new to this. So on my side, and on your side of the brain, there's nothing here. All it did was came down into liquidity, and reached a discount, a very, very deep discount of this dealing range right along here. That's all you know right now. Liquidity, fair value gaps, and the concepts of market protraction and what? Impulse price waves. So, we took out sell-side liquidity while being in a discount, okay? So if we're protracting in a discount, we should expect price to move higher, okay? If you're bullish, right, or you expect price to go higher, you want to be in a deep discount, because like I said, you don't want to sell in a discount, and you do not want to buy in a premium. Okay? No go. You don't want to buy in a premium. You don't want to sell in a discount. No. No can do. Looking into this, all right, we're in a deep discount. We took out sell-side liquidity, and then we go right back up. See that? Cool. But we protract again. Into what? JJ, what do we come into? Uh-oh, do you see that? Very, very big fair value gap. Very, very big. Then what do? We consolidate a little bit. We consolidate a little bit. And then bang, we push higher into what? Buy side liquidity. See that? Yeah, look at that. Pretty cool, isn't it? Buy side liquidity. But what do we also trade into? Like, where do we also go? Let's really look. Where do we also go? We go to a premium, okay? If you look, since we're now in a premium after this discount run, there's now a premium run, okay? But this was the run to premium. This up move here, this was the run to premium right here, right there. That little whoop, right back up. That's the run to premium. So now we have a run down to discount right along here. We're in premium now, right? Around this area, not worrying about this anymore. in this area, we are where? We are in a premium of this dealing range that I drawn from this low to this high. Why did I draw it? Because if you look, what are the last two highs it took? These are the last two swings that took out liquidity right here. These are the last two swings right there. What did it take out? This low and that low, which created this swing. Then we came right back up into what? That high and that high. Did we come and break this high? Nope. So swing to swing, there's your premium and discount range. Enough of that, back into here. Since we are in a premium, okay, we can expect price to protract into buy-side liquidity. That's your manipulation before price then has a run into discount. But does it reach a discount? Nah, because it's end of session. Okay, end of the day, it's not going to reach it. It'll probably reach tomorrow. I mean, not tomorrow, but you know, when price opens back up, when the market opens back up, it'll probably reach into a discount. It'll continue this little run here. It might open up and it might like gap down into a discount, but you never know. Price comes into buy-side liquidity. Okay, then we have a final run down. Now we came up here. Did we come into anything? Did we? Uh-oh, do you see that? We also took out these previous highs here. Interesting, is it? So, for this right here, right? This was both protraction and an impulse price swing. How? How was it? That's probably what you're asking. How? This is probably like messing with your brain right now. How? How? It's because one, for this run here, this was market protraction here, okay? So if you saw that this was market protraction, right here, this little run into sell side, this would be an impulse price swing, okay? But if you look again, this is also market protraction because what are we going into? This buy-side liquidity here, which is in a what? It's in a premium, okay? So we're taking out buy-side liquidity that's in a premium, which indicates that we can go lower based off, you know, certain confluences. You don't know a lot of confluences, but I'll teach you the rest. I'll show you. I will show you. Just not in this chapter, okay? There's another chapter coming, so don't sweat yourself. But since we protracted into these highs, we can expect price to go lower later, okay? We consolidate a little bit, have another point of buy side, we manipulate higher or protract higher into it, bang, okay? And then we finally sell off. Pretty cool, isn't it? Very cool, very cool. And now, one thing I will teach you, right, is old liquidity levels can be used as PD arrays, okay? What a PD array is just basically a point where price can is a point in price that price can use as support or resistance, okay? It's an institutional reference point. Something that price can bounce off of. That's a PD array, okay? And a fair value gap is a PD array, just so you know. But old liquidity levels, right, can be used as institutional reference points. Because if we draw this liquidity level out right along here, you can see that price came back up into this old liquidity level here, buy side, and then we sold off. Whoa, see that? Whoa. And if you look again, this high here, this buy side liquidity, we smashed it, right? But what did we do? We came back down. If we really zoom in here, we came back down into that point, and then we headed higher, okay? So, it's based off how you see it, okay? Because market protraction can also be an impulse price swing, okay? Because it's based on your narrative. Like I taught you in the previous episode. It's based on your narrative. An impulse price swing can also be market protraction, and market protraction can also be an impulse price swing. Based off how you see it and how you analyze it, okay? It really doesn't matter, because if you miss a move or you catch a move or you don't want to take the move, it doesn't matter. It's your narrative, okay? So, but what I'm really teaching you right now is versatility, okay? That's what I'm teaching you, is to add versatility to your analysis, okay? So you really pay attention. Because this move here, this little run here, was market protraction and what? Market protraction and an impulse price swing, okay? If you didn't see this down here, if you weren't paying attention down here, if you really weren't looking at any of this, if you weren't paying attention here, right? And you weren't paying attention to this little down move, or this little down move we identified here, if you weren't paying attention to that, This would be your market protraction. Okay, you'll be like, okay, I want to see price push up or manipulate up into buy side liquidity here, and then if we don't see or show any, willingness to go lower, I'll wait and see if I can find some sort of confluence or some sort of willingness for price to go lower. And all this right here is market protraction. All of this is market protraction. Like starting from here, if I can draw like a little marker that says market protraction. Starting from there, that's where the market protraction begins for you. For example, hypothetically, that's where the market protraction begins. If you weren't even looking at this, okay? Because like I said, it's based on your narrative. It's based off what you see, okay? Very, very simple. Very, 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 very simple to understand. You have your own mind. You don't have to follow one specific blueprint or one simple schematic or one model. You don't have to, okay? You don't. You don't. You don't have to say, do this every single day. Nope. I'm not teaching you that. I'm teaching you in this entire mentorship is strictly versatility in how to trade. Not what to trade, but how to trade. There's a big difference. Okay, I'm telling you, there's a big difference on how to trade and what to trade. How to trade is teaching you how. What to trade is teaching you what to trade. Very, very. I know that may sound a little vague right now, but I promise you'll learn probably around like chapter 2, chapter 3 of this mentorship of what I'm going to be teaching you. But starting from here, hypothetically, this could be your market protraction. But from what we looked originally, this was your impulse pricing. But we're just gonna go over an example. Then I'll end this video here. Market protracts, right? You're expecting price to come into what? Buy side liquidity. Okay. We're like, okay, we're gonna wait for price to come all the way up into buy side, and then we're gonna look for some sort of confluence or willingness to go lower. After price takes out that high, you're like, okay, it's still consolidating, so it's not, really showing anything to go lower. So we're just gonna wait and see if it can protract any more before going any lower. It's probably waiting to do something, and in which it does. It does. Buy side liquidity there, right there. So it takes that out, and then finally drops lower. Bang. Pretty cool, isn't it? Very cool. Very cool. Very, very cool concept. But anyways, I've been yapping for a little bit, honestly. I'm trying not to yap as much in these videos because people in the Discord is like, please don't yap in these videos and make them 20, 40, 2-hour yap sessions, and then you're just watching price move up and down for no absolute reason. I'm not going to do that. I promise. I think I've said this a couple times, but I won't do that. But actually, enough of me giving a little outro and, yapping out in this episode here, and I'll see you on the next one. Peace.